I found myself wondering why ICT entered the trade precisely where he did. And I think I gained some insights for myself as a relatively new ICT trader studying for somewhere between 6 and 12 months now. Um, I think I definitely gained an insight into things I've learned previously, but now have a much deeper understanding as a result of the following. So on Thursday, price dropped here, came down, went back up into the fair value gap somewhat. This is even deeper on the 1 hour, comes down to about here, I think. And then traded down early Friday, came back up into the fair value gap. If we look at it on an hourly basis, there we go. So the hourly basis, we come almost to consequent encroachment on the fair value gap, do not close above it. And then we start moving down. But as we can see, ICT does not enter right away. And if we go into the 1 minute, we'll see that there is quite a bit of chop here before he entered. And my question was, why did he enter where he did? What was I not seeing? Why didn't he enter here or here or here? What was he looking for? What was he waiting for? So we're back on the 15 minute, and I think that we have, if I understand correctly, this would be a bearish breaker over here on the 15 minute. So we had a high, and then the down close candle before we hit that high really would be a bearish breaker. And if we see on the 5 minute, it's pretty clear as well. We can make it smaller perhaps, but whatever. I drew this based on the 15 minute. What we see here is that price just nicked in there. I think it was about 1 point into the bearish breaker. And as we said a moment ago, continue to chop around. So what happened, I think, is that once we nicked into that breaker, ICT was ready for a trade. And what I want to understand, as I said, is why did he wait? Why did he wait another 31 minutes? Okay, and that's a really important insight. And the answer is pretty clear on the 15-second chart, I think. All right. So I was looking at this. We nicked into the bearish breaker over there. Price came down, went back up, forming a lower high, came back down, down, higher low, roughly equal, lower high, lower low. And then over here, we had this displacement. But what I wasn't so clear on was, well, we had some displacement here as well and over there as well. And while looking at this and studying it, I realized something which, of course, might be obvious to many, but this was just a renewed insight for me. Might be helpful for you. This is the first time that we had displacement below swing lows. So from when we hit into the breaker here, there was bit of displacement here, but it didn't take out a swing low. And this is the first time we had displacement that took out a swing low. We take out the swing low over here, take out the swing lows over here, and even over here, although we didn't close below it, not yet. So then, but because of that, I think that's why he waited for price to pull back up, because he talks about entering a trade when it's going away from your drawn liquidity, which was probably the daily volume imbalance below, because he got out at the very bottom of that daily volume imbalance and entered here, was not concerned after that. I guess once he saw this displacement, which took out these swing lows, I think he was comfortable entering, felt that's the right time. That's my understanding. Don't know if it's correct, but it certainly makes sense for me, and it's opened my eyes that much more.